There are two sides of real estate, the second one being commercial, and we're diving into that aspect today. Okay, hello, and welcome back to the Vancouver Life Real Estate Podcast and, of course, YouTube channel. We want to thank everybody so much for watching and listening to this. The numbers are growing, so we really appreciate everyone who has subscribed. We're definitely seeing the results here, and of course, YouTube likes to promote our material to people that has subscribed more often. So thanks again to everybody who has done that. So as we talked about earlier, today we are going to be talking about commercial real estate, predominantly on this podcast and YouTube channel. We always talk about residential. That's largely because that's our focus. That's what Ryan and myself are licensed in. But commercial real estate is a huge aspect, and we have a bunch of investors that have, of course, moved over to that asset class as well. So we thought it would be fair and fun to dive into a bit of commercial real estate and what it is. And to help us today do that is our colleague, Mr. Liam Simpson from Wright. Liam, welcome to the channel.
Gentlemen, thanks for having me. I can see why we're on YouTube. Pretty good looking slate we got here. Happy to dive into the details. Let's get started.
Perfect. So why don't we start off with you telling us a little bit about yourself and then a bit about Wright and what that brokerage is all about.
Yeah, absolutely. So while I was a student in college, I started picking up on real estate investing and started picking up on key investors in California and across Canada. And I was like, man, I'd really like to own real estate one day. And then I started talking to a friend who happened to just be a part of a family who owns real estate, and we got into conversations, and that kind of pointed me to commercial. And I fell in love with the asset class almost immediately, with the complexity of deals and the types of clients that you deal with. And that led me to Wright. And so Wright has been in business for about 10 years now. And we've been very fortunate to have grown over $1 billion in transactions, with offices growing, it seems, by the year. And the amount of brokers we're getting is fantastic. And I think that's because we lean on a very successful model that I think has kind of been missed in Vancouver to some aspect. And that's paying attention to the areas that a lot of the larger firms don't really put a lot of emphasis on. This is small business leasing, and developing clients as they grow their business. A lot of people wait for businesses to get huge, and then they're in a line of 10 and 20 people trying to get the business. But our model is to start with businesses that are small and help shape them and allow them to grow.
Perfect. Really appreciate that. So I think just in case, and just for our listeners and viewers who aren't entirely sure what commercial real estate really is, can you kind of give us, sort of the ground up explanation of what commercial real estate is?
Yeah, absolutely.
Yeah, this isn't just so we're clear, it's not doing commercials of real estate.
As much as we like to look like we do commercials for real estate,
we do a lot of them, but that's not what we're talking about.
Yeah, absolutely. So I think with commercial real estate itself, it's one of those things that not a lot of people understand, but they see quite a bit. And so you walk into a retail unit and you're kind of just focused on the t-shirts or something like that, and you're not really focused on, hey, this isn't really like a home or anything like that. It's a place for a business, and that's exactly what commercial real estate is. It's real estate parceled out for businesses or income production. So often what you'll find, the most characterized people interacting with commercial real estate are business owners who are using the space to sell products or manage their products, or investors looking to have a little bit of that income.
And even then there's mixed use too, right?
Absolutely.
Where you get people living up top. I mean, oftentimes, when we're touring clients around properties, especially in condos and stuff like that, where, there will be all along the first floor is all commercial real estate, being all all retail or restaurants or something to that effect, right? And then everything above that is residential, right? So they're very close together and seemingly worlds apart at the same time.
Yeah, exactly. And I think that's a really key point because of, just the nature of scarcity of land in Vancouver. There's had to be a lot of innovation in real estate. And so mixed use is one of those huge innovations that we've seen in the past 20, 30 years. And I mean, if you even go out to UBC, what they're doing now is they're building parkades and then putting a soccer field on top. And so it's just like whatever you could take, just pack it in. And if it works, I mean, everyone's going to start doing it.
Yeah, that's really cool.
Yeah.
So I guess, I think right now, just if we lay the framework out for, I think where a lot of people are in the real estate market, generally speaking, whether it's residential, commercial, industrial, whatever it is you're after, we have seen probably in the last 20 months, a relatively strong bull run in real estate, low interest rate environment. People who were in the bottom third of the economy were most affected by the pandemic. Those people typically weren't buying commercial real estate to begin with. The other sort of 2/3 of the economy that were more or less incubated from losing their work, or at least losing a lot of it. Those people, if they kept their jobs, I've seen people make a lot more money over the last year than they thought they would. A lot of savings have taken place, and in the residential side of real estate, we've seen a huge push, and prices have jumped, and so on and so forth. Last week, Dan and I came out and actually called the top of the market, which isn't something that we like to do or do very often. But in trying to help our clients sort of understand where things are at in the real estate market, we looked at all of the metrics inside of the real estate market. Activity levels, days on market, whether things are selling above list or at list or below list, the velocity of sales, all that kind of stuff. We started to notice that there's definitely a swing in the market taking place now, especially in the residential side. However, the game is a little different in commercial. I mean, the rules are different, right? So much so that, I don't believe there's a foreign buyer's tax in commercial real estate. Correct me if I'm wrong. But, throughout all of Vancouver, there's no foreign buyer that can buy without paying 20% tax on top of that property. Is that the case with commercial real estate?
So I think over like the past 2 years, what we've really seen, and this is something that's been driving the market, is that with the foreign buyers tax, obviously the emphasis was to kind of drive down home prices and make the market a lot more sustainable for people who live here. The market has continued to go up, even in the commercial side. And I think a lot of people are scratching their head a little bit, but people are paying these prices. And I think we could dive into a little bit later about the effects of COVID and how that's impacted with commercial real estate. But as far as everything that we've seen, a lot of the demand has been driven by institutional investors in office and asset classes similar to that, and a lot of small time investors that just did really well on their land or industrial warehouses over the past few years, and are looking to get into other assets. As we previously mentioned, there's a huge scarcity of land in Vancouver, and there's a lot of people that want to buy it. And so I think the market is just kind of moving on its own.
So those people that are wanting to buy it, are they locals? Are they Americans? Are they where are they coming from, and who's buying or who's wanting to buy and creating this demand, right? I mean, I understand low interest rates partly to point at, but who's buying?
Yeah, so right now, what we're seeing at William Wright right now, it's mostly a lot of small businesses are looking for end user spaces. I think COVID changed a lot of strategies for small businesses. People are reevaluating the square footage that they need for office. They're reevaluating the square footage they need for retail. And I think pushing into industrial, I think people have seen their property values go up quite a bit and are looking to capitalize on that a little bit more.
Interesting. Yeah, because when I look at, we, like we said, we'll get into some of the COVID stuff later, but one of the things that I think a lot of people thought about their own workspace, right? Like in COVID made things real for everybody, especially those working in an office space or a high density, right? Where density is high. And I think a lot of people have decided, oh, well, now that I'm working from home, I don't think there's going to be this demand for office retail space going forward. I'm kind of mixed about it. I think company culture is getting sacrificed in a big way here, and I think attrition rates are going to climb in the coming months. And I think that people working from home have had trouble with turning off at certain times, knowing when their work kind of boundaries exist and when their home boundaries exist, right? I think a lot of people have that trouble, and I think a lot of people when they work, they want to get away from their home, right? And they want to retreat back to their home afterwards. So, I know that when COVID first, set in, everyone was like, "Oh, office space is done." and I think we didn't know how we were going to come back. So I think that was a legitimate fear at the time. But now, as the vaccine is rolling out, we're starting to see behaviors change. Do you want to touch on sort of office space and what your position is on that? Whether you think it's going to die or whether you think it's going to come back?
Yeah, absolutely. Fantastic question. I think, throughout COVID and anyone who kind of interacts with commercial real estate, everyone's kind of been like, well, everyone's working from home. What the heck's going to happen downtown now,
Yeah.
Um,
Yeah.
and I think most of the reasons are mostly psychological. What we're seeing, and a lot of reports are coming out, is that work from home worked really well initially. People rolled out of bed, they got to sleep a little bit more, and now as time kind of goes on, new employees are being onboarded, they're learning the ropes, and they're still experiencing this huge disconnect from the company because the whole thing happened online. And so you have people showing up at work and introducing themselves, and they've been working together for a year, which is absolutely insane, right? And so, and it kind of boils down to other things, and I like to call them water cooler conversations. And it's when you kind of stand up and you've completed your few tasks for the morning, and you go to the water cooler just to have a cup, and you have a conversation. You have a conversation with someone and create that connection, create that relationship. That's something that doesn't happen over Zoom. It's these planned social events that happen online. And where I think one of the core fundamentals for office space are unplanned social events. And it's where, you don't have it scheduled, you don't have it, you don't know what's happening, but it makes you feel a part of something.
When you look at how company culture is typically created, culture exists in the 2 minutes before the meeting starts, right? It exists in the 4 minutes afterwards, in the debrief, in the, like you said, the water cooler conversations. These are all things that create company culture. I know before COVID hit, I know there was a big issue with cell phones, and that cell phones were actually impacting those 2 minutes before meetings, those 4 minutes after meetings, and the water cooler conversations. Again, attacking company culture, right? So it's going to be really interesting to see. It's not the first time businesses have had this issue, but it's going to be very interesting to see how it comes back. And I think there's going to be a lot of burnout in the coming months here. I think a lot of people have been working; they haven't been able to travel. There's they're questioning things in their life, and that has impacts in real estate, left, right, and center. Right? People decide they want to go travel for the next year as soon as they can travel. Well, that's going to affect whether maybe they sell a piece of real estate to do that. You know what I mean? So,
absolutely.
So it's going to be an interesting return to work, and an interesting rollout, I guess, of how people whether they end up buying more office space or whether they return to a bit of a hybrid model, right? Where there's 2 days at home and 3 days at work, something like that.
Absolutely.
So Liam, on that note, then what kind of numbers can you share with us for what you saw happening in Vancouver? And what I mean by that specifically is, for example, like the downtown condo market got hit by like a 15% price point reduction during sort of the height of COVID, but it's come back almost 100% back to those heights. In Toronto, for example, I heard as of, I think, April, the downtown office lease market was back to something like 85% of what it was pre-COVID, meaning that I'm sure it got absolutely devastated at the heights, but it sounds like it's really turned that corner and is coming back. Are we emulating the Toronto market at all, or what are you feeling locally?
So when COVID hit, I think we were around a 2% vacancy rate. So very, very tight, kind of unhealthy market. And as COVID persisted, the smaller sort of tenants, 10 people max in the company said, hey, our lease isn't worth it, let's get out. And so the vacancy rate shot up to around 11%. 8 to 11% is what we were seeing, which was ridiculous. And most of it was subleasable space. And that was shoved onto the market. So yeah, there was definitely a huge initial fear that office space would not be utilized down the line. But if anything, we've been seeing now is that people are starting to explore the options. Landlords are being a little bit more lenient on inducements for office spaces and prices in the first year, giving these sort of COVID discounts that we've also seen in retail, just to get people back into the spaces. And I think tenants from our side are kind of acknowledging that it's important to have a center for collaboration, somewhere where we can bounce ideas back and forth and not skip over the fine lines in between Zoom calls.
Got it. And what about the other sort of asset classes in commercial? Again, to kind of relate to the residential side, like, yes, we saw the downtown condos take a hit, but then the suburban detached market, for example, came out really strong and kind of surprised people initially. And then we sort of saw that effect trickle down into townhouse. And then, the third wave here is seeing condos coming up and having all the attention. How did sort of each asset class within commercial act? Did obviously the office take a hit, but industrial took off, and where did multifamily sit within that?
Yeah, absolutely. So, I mean, there's no other way to say it. Retail and office was hit pretty hard. People started looking online to buy stuff, and rather than just go in, try it on, and purchase it in the store. That was a huge thing. But what we kind of saw before COVID was that shift as well. E-commerce was a thing before COVID, right? And so when COVID happened, it didn't really change much. It just accelerated a change that was already happening. And so what we've seen is a massive shift, and the wind is really at its back for industrial small bay warehousing. The reason being is that the square footage is a little bit larger, but it's not as impacted by consumers walking through the door, right? So our businesses can still operate there. And e-commerce doesn't really rely on the high rents that retail are demanding. And so people are able to save money and start shipping online with warehousing. And so that huge shift has been pushed over into warehousing, industrial units, and distribution and innovation has just been skyrocketing. Now what we're seeing are cross-dock warehouses, where you'll have a warehouse that's basically in an I shape, and trucks will back in on one side and on the other side, and then parcels will just
go from one to the other.
Move from one to the other. Exactly. Highly efficient.
It's a transfer station.
Yeah, exactly. It's like a airport. Yeah, exactly. A bus stop for parcels. It's highly efficient. And these sort of innovations have been really driving the market. Groups are integrating AI now for parcels above, to move them from one section to the other, to cut down on missing packages and stuff like that. It's absolutely amazing to see the innovation going on in industrial, for sure.
So do you think that shift then away from the high rents in retail into the e-commerce side, into the warehousing, I really like that idea of a loading dock piece of real estate. That to me makes a lot of sense. There's huge utility there. But that to me, I mean, that sounds like it's here to stay. That doesn't sound like it's moving away. That sounds like a fundamental shift. I mean, I still have, when I think about trying on a pair of shoes, I have a tough time buying shoes online, because if they're not the right size when they arrive, I've got to go to the store and get the right size, right?
Yeah,
so there's still that.
Yeah.
And I don't know how you get away from that. But the idea of transport, though, that to me, I could see how, warehouses would become very popular with that.
Yeah,
very popular.
And there's other innovations too that we've seen from the city with regards to zoning bylaws. So if you look at Port Coquitlam, for instance, and Dan and I have been talking about this for a while now, you're seeing warehousing where you can have office space on a second floor. 60% of the space can be used for ancillary office. And so anyone who needs office space but also needs warehousing doesn't have to do two separate leases. They can just move into that one spot and handle the business that way. and keep everything
It's
centralized.
it's more leverage at the end of the day, I think.
Yeah.
And actually, we went and looked at we're part of an investment group, and we went and looked at uh, this business called Coho, and it's basically it's a kitchen environment where you've got all these different food trucks that have a backup kitchen in a warehouse, right? This warehouse has now been divided into 10 by 10s all the way along, prep stations, right? And these companies come in and they rent their individual pieces from the owner, right? The owner has gone from one tenant to 100, 300, right? And these people are all paying their rents to come in and use the times that they blocked, right? And it's such a fascinating use of space, and really a new model that for business and for the use of space that I think is here to stay, right? So it's very interesting to see how it's not just a warehouse full of junk, something like that, right? These are
exactly.
highly organized, highly profitable, very efficient use of space, and that's why they cost what they do now.
Yeah, absolutely. And on that point, it's a great point. So there's all these new uses for industrial warehousing, but at the same time, there's still Joe and his auto body shop that need to use warehousing as well. And so you have a huge influx of people using warehousing. Now, there are a few problems with what's going on in the industrial market right now. Lease rates are skyrocketing. And typically what you see with industrial are longer term leases. So there is a section of tenants who are leaving a 10-year lease paying something like $7, $8 a foot. And they're coming in and looking at the market now at 16, 17. And that is definitely creating some problems for businesses, as you can imagine, absolutely. But on the flip side, these prices are being driven up by these e-commerce ghost kitchen tenants who can afford to pay those rates and customize the space differently.
Got it. So Liam, as we do have a lot of investors that tune into this channel, what do you see, I guess, as where most investors are coming into the market now? Like, what are they demanding? And do you sort of recommend that type of commercial real estate moving forward?
Yeah, so I think there's three key asset classes. We've talked about a few of them. First of all, multifamily. Multifamily is one of the most stable investments, I think, anywhere in the world for commercial real estate, as long as it has a good population. We've seen negative immigration or very low immigration throughout COVID, and multifamily has still stayed very, very stable. It is very expensive here in BC. You're only looking at about a 2.5% cap rate up to a 3% cap rate. That's because vacancy is so low. So you have less risk on that side as well. The next would be industrial land. As we know, we're surrounded by the mountains, the oceans, and the border to the south of us. And cities are popping up all over the place. So land is extremely scarce. And most often what we're seeing on the listing side for land is that we're not selling to end users as much, but we're selling to developers who just want to have their foot in the door on that parcel. And so investing in land, owning land, leasing it out and holding it for redevelopment in the future is definitely a huge play that a lot of investors are looking for. And then finally, the winner of COVID, industrial warehousing. Everyone loves it. There's huge demand for it, and supply is shrinking, but a lot of new developments are trying to reduce that. So.
Fantastic. Great to know. Really appreciate the summary.
Yeah.
So while we know like commercial lending is kind of its own beast as well, and I think we're going to get a commercial broker on this channel as well to kind of dig deep into it. But again, Liam, for the people that maybe don't know even the introductory level information about commercial lending, can you walk us through the basics? For example, in residential, is if you're going to look at an investment property, your lenders generally require at least a 20% down payment. What does that look like on the commercial side?
Yeah, absolutely. So it really depends on who you are, what you're buying. If you're an end user, what they're going to want to look at is your company the last 3 to 5 years, how you guys have been performing, what sort of parcel you're looking at, how much you're looking to spend. I think usually for end users, what the banks like to see is a 75% loan to value, so 25% down. And then on the other side, if you're looking at an investment property, it gets a little bit more tricky. you'll be looking at the leases on the property. And in commercial, it's really not standard. It's kind of the Wild West. Sometimes you can have, a guy just paying cash every month. Some guy, who's got himself in a 20-year lease. It could be really anything. And so you have to really break those down and project them over a few years is what the lender wants to see, that you have that income coming in and it's stable. So it really depends from parcel to parcel. And who you are looking to get into it, but definitely have a conversation with a mortgage broker before you're looking to get into land or commercial property.
Got it. Sounds like so it's very, very case by case, essentially,
Yeah,
and definitely talk to somebody who knows, what they're doing and of course, what you're looking to do.
Yeah.
Ideally an investor themselves.
Exactly.
Yeah.
Interesting. So I guess, Liam, we, while it's very hard to make predictions in any market, I think this one is one of the most unique any of us will ever live through. But, you do know the industry quite well, and we do like to advise accordingly. And we're just curious, what are your thoughts on, let's say, the next 3 to 4 months in commercial real estate here in GVRD? Which properties are going which way? And there's a follow-up question, but I'll wait till after.
Perfect. Okay. Absolutely. Love that. So as far as office is concerned, I think there's going to be an innovative return. What we've seen with what's called office density is the person per square footage has been growing. And what they're trying to do is create an office space that's essentially pandemic proof, can be adjusted, can be moved around, shapes can be changed. So more fluid and dynamic spaces. So I think we're going to see a lot of innovation on that side as companies try to hold on to that corporate culture, but reduce, an office pandemic. And overhead, exactly. Multifamily, I believe, is always going to be strong. I think there are a few issues on the larger scale with a lot of multifamily in Vancouver. Making sure they're well maintained is a hugely important piece whenever you're looking at an apartment building.
Is that because sorry, just quickly, is that because of a lot of foreign ownership? Like there's owners that aren't here to maintain it?
Could be. A lot of the time, large multifamily parcels are owned by institutions, pension funds, and maybe they don't really examine the properties as well on the books, but it's also because a lot of the multifamily in Vancouver just happens to be really old. Really old, and it's kind of getting to its usable life for plumbing, electrical, and all of that.
Makes sense.
Yeah. And then over into industrial, the wind's really at its back. There's new tenants coming in. Land is scarce for industrial. The only thing I would say that's really kind of pushing industrial in the opposite direction would be the older sort of tenant base that's used to industrial can't afford the new rates. So I think there's some more stabilization down the road. As investors increase the price, you need to increase the lease rate to be able to afford that price. And so I think it definitely is a little bit high, but the demand is there. The demand is there, and the new tenants are paying. So that remains to be seen.
Yeah, and I think of some of these e-commerce, we're talking about tech, right?
Yeah.
I mean, that's e-commerce. And at the end of the day, Dan and I have been helping Amazon employees, Salesforce employees, Apple, Microsoft guys for the last 2 or 3 years since they've been coming here, right? They've been coming across the line. They've been coming here for work. We've seen article after article that, Vancouver and Ontario in particular are likely going to become the Silicon Valley of the North. And as that push continues to come up here, because people are after a lifestyle, right? A lot of these people work from home. They do. They've been doing that for a long time. So it's not new to them, right? Yeah. So they want to be around a beautiful place where they can go from computer screen to, beach or slopes or something to that effect, right?
Yeah. Golfing, skiing, boating. Yeah, exactly.
But the other thing that's worth noting is that these people that are coming here for these tech jobs, they're typically young. They typically are commanding a fairly decent salary. I mean, the vast majority of these people were buying, between $650,000 to $1 million on their own, right? Without a secondary income, right? So, and a lot of these people also have stock options. So when you say, lease rates need to come up, Well, when you look at the performance of some of these e-commerce companies, they can afford it.
They
And
can.
that's the difference, right? And some of that money isn't being made here.
Mhm.
Some of that money is being made globally and it's being spent here.
Yeah.
And you can cry foul all you want, but that's the nature of the game.
I think there's a balance, especially with industrial. There's a wide array of uses that it can accommodate. I think there's a balance. Investors don't want to nestle themselves into one type of tenant. And that's what the higher lease rates are doing. Everyone's getting into e-commerce now, but I think we'll wait and see where it stabilizes out to. I want to be firm and say that the point remains to be seen, but I think there's a balance to strike between older industrial tenants and this new wave of tenants that are coming and driving prices up. There's only so much that the older tenants can afford. And we just don't have the statistics on the balance between older tenants and newer tenants. So it's definitely something to keep your eyes peeled for. But when you're using a commercial broker, hopefully, to buy your commercial property, you definitely want to look into the zoning of the property and see what it can allow. And that'll kind of give you an indication of what sort of tenants you want to be marketing towards.
Got it. Okay. The follow-up question, maybe a bit of a loaded one. If you had, I guess, one place to go and one asset class to invest in, where would that be right now?
If it was me, oh man, it would be land for sure. I love land. It's crazy. It's crazy what land prices are going for nowadays. And you just think like, look at this beautiful gravel lot. It's crazy, but the interest is there. On the listing side, having done a few transactions in North Surrey now, what we're seeing is 2, maybe 3 days, and you have like 15 people, and people like, back up, can we do a backup? And it's like, we haven't even accepted the first offer yet, and they're already thinking that we have. It's crazy. It's absolutely crazy. And this is because it's all getting pushed out into the valley. So if it's in the lower mainland, if it's in the greater Vancouver area, it's central. You have access to Vancouver, you have access to Langley, right? And I think that's what people are looking for. Chilliwack just came out with a new plan. And so they're kind of picking up on the interest flowing out.
Earlier you mentioned, just briefly, that there was new cities, or if you will, popping up, right? Or maybe increasing in density. Mm-hmm. I mean, the one thing that really speaks to me is if you've driven on the highway and you've gone from Vancouver to Chilliwack, you'll have noticed leaving Vancouver, there's no Molson plant anymore. And when you drive out to Chilliwack, there is a Molson plant that's probably 100 times the size. It's enormous, and it's right on the highway, right? And it got me thinking, like, this is more to your effect. It's understanding now that maybe the center of business won't necessarily take place in Vancouver all the time, right? Now we're starting to see this spread, and we saw that in the residential side of things. We saw, and COVID was the catalyst. It was already slowly taking place. COVID sped that up, right? Yeah. I think you will see a return to Vancouver, but I think it'll be a small comeback. It won't be a crazy, blow your roof off your place kind of comeback. But I do think that as companies divest out of being in these really expensive leases and really expensive real estate, they can achieve the same things for a lot cheaper being a little further out, and honestly become far more profitable, can build their business, and so on and so forth. So I can see why that's the case. I can see why land is popular outside of Vancouver now, right?
Yeah, absolutely. Absolutely. So there's a huge push out through to Kelowna. Multifamily buildings and other commercial grade investments are looking at 4 to 5 caps, which is insane. It's unheard of in Vancouver. And sim even out into Victoria. There's a lot of interest in Victoria. Development is up in those areas, and it's getting absorbed. People are purchasing the units that are coming onto market. Vancouver will always be there, and Vancouver will always be special, but it's kind of in the scope all the time, and I think opportunities kind of just fall outside or are falling outside right now.
I don't think Vancouver will ever become undesirable. But when I look at what I'm getting at is I'm trying to identify a growth rate. I'm trying to identify, like, okay, if I'm here today, where am I going to be in 2 years? If I bought an industrial property in Vancouver, or I buy an industrial property in Abbotsford, am I looking at a 300% gain in Abbotsford versus a 30 or 40% gain in Vancouver because of the affordability issues, right? I mean, that's what we saw in you look in, actually I had Cole, our assistant, reached out yesterday to look at a townhouse in Port Moody that sold for $300,000 over the list price, a townhouse, right?
Insane.
It's insane. That kind of growth, you're not seeing that in Vancouver now. I mean, you probably saw it 5, 6, 7, 8 years ago, right? But we're not seeing that now in Vancouver. And I think if you're looking for a growth market, I don't know if Vancouver is your growth market anymore. It seems to me like it's a bit more of a stable market, right?
Yeah, and there could be other opportunities too, because there's different ways of pricing commercial real estate. You could go based on comps for a tilt-up box, right? But if it's producing an income, that income is used in establishing the price, and it's priced based on a cap rate. So if we have higher lease rates in an area, based against a price, that could drive the prices up as well, and you have that monthly income. So there's many different ways to look at it. A lot of that remains to be seen.
Cool.
Interesting. I think that's probably a good place to end it off, gentlemen. It just goes to show, Liam, that land is still king. I mean, even John Rockefeller has quoted as saying the major fortunes in America have been made in land.
Absolutely.
Sounds like that is still true to this day. Thank you so much for your time. This was super informative. Liam, for those who want to learn more about you and maybe, buy a commercial property or two, how and where can they find more information about you?
Yeah, absolutely. My email is liam@williamwright.ca. And anyone who listens to this podcast wants to talk about commercial real estate, I'm pretty widely available at 604-655-4658. Feel free to give me a call anytime. More than happy to chat about what we talked about here on the podcast. Thanks for having me, guys. It's an honor and privilege to spend this time talking with you guys. I hope to do it again sometime in the near future, for sure.
Amazing, guys. And don't forget to hit that subscribe button. Hit it, smash it.
Right there.
All right.
Awesome, guys. We'll see you next week.